Hey everyone, it's Nick with Us versus Herd. We're going to be talking about holding on to your stocks during a market downturn or potential bear market. If this is your first time here, hit the subscribe button. If you want to get notifications of when we go live or when we post videos, hit that bell button. I'd really appreciate it. I'm going to be showing you my Robinhood portfolio, kind of how it's been performing over this last year during this volatility, and kind of like what you should do in terms of encountering a downturn with your portfolio, and kind of what your outlook is and what your plan is. I mean, a lot has to come down to your investing plan. This video is more for investors, not for traders or day traders or stock traders or options traders. This is more for long-term stock investing, and we're going to be looking at some charts. I'll show you what's going on here with my Robinhood portfolio. But let's just do a one-year recap here. As you can see, the market has been pretty choppy this year in terms of my Robinhood portfolio. I'm pretty heavy on tech stocks. In November 2017, I did sell my Tesla stock, but most of it, I've just been adding shares and just holding steady here. And as you can see, in the last year, we're up 14% on this portfolio, which I mean, generally is pretty good. Last year we were up 30%. However, we did reach a peak back here in July when we were up like 40, 45. 44%. So as you can see that the market, to see your stocks go, you were up 44% to 14%, and as you can see here, we are at $1,500 now, we're at $500. So that's like, that's a grand in difference, and that's a big difference to this portfolio here. I mean, this is a pretty small portfolio, but just want to show you here what's going on. Back in November 1st of 2017, we were actually, we had 3,400, 3,500, and right now we're at like 4,000. And as you can see, we've had quite a bounce back here in the last week. I mean, a lot of that was, we were down. I mean, this portfolio was down almost break even on the year. We were only up like 7% then, and now because of this week, we were up 6%. But as you can see, like this week started off real rough too. So for people that are holding stocks are definitely getting squirmish, and they're definitely getting, when you see your capital get cut down like that, like for people that are retiring like this year or next year, I'm sure are getting really nervous. But since I'm on the younger end and this portfolio is really on the small end, and I'm not really, this money in here isn't really part of my income or any money that I'm counting on. So, my investing plan for this portfolio is really just to grow it over time, on a 5-year, 10-year basis. And really what I'm looking at to do here for, the stocks are just to hold it, to grow the account, and only close out positions when I lose faith in the company, or if I feel like it's not going to do well in the future. Right now, my holdings are Facebook, Square, Twitter. Snap is the only one that I'm super red on. I bought that, and right now I haven't added to the position. Like if you look at Twitter, my Twitter I've added to the position. Snap, I did not add a single dime since I bought it, and mainly because I don't really have much faith in the company. There's not a whole lot invested into this company. So, right now, for me to lose $138 is not going to be a big deal for me. Like, the average cost is $16 here. This is just a bloodbath. So in terms of this, my plan for Snap is just kind of let it go and see what happens. The other stocks, Facebook, I've been holding since 2015, I believe 2016. My average cost here is $88. So we were down a little bit on the position. We were up over 100%, but now we're up 70% of this position. So as you can see, this is a very long-term account. Square, average cost here is $33, and we're still up 121%. So pretty good. So my long-term outlook on Square is still bullish. And then Twitter, my average cost here is 19%, but when we had that crazy run on Twitter, back in here, like when I went to like $44, $46, this was definitely like well over 150%. It was like 150%, 160%. So, and what do you do when you see something like this happens, when you see like a dramatic drop. And like for me, the goal for my portfolio is just to hold over time and grow the account. Like if you're investing, you really need to have patience. And in terms of downturn, when market downturns, you want to add to your portfolio. Like you don't want to add when it's like ripping. Like last year, 2017, it was really hard to add to the position, mainly because stocks just kept going up and up and up. Like this year, you find it a lot easier to add, which is why I did add Alibaba. We're down like 2% on this, but I just put this position on. Our average right now is 152.96. This is a small position. It's trading for 148. It did hit 151, 152 today, so almost break even on this. When did we buy this? We bought this on October 5th. So we bought this on October 5th, and it's right now November 1st. So we've been holding for a month, and we're down 2%. But for when you start putting on a position. Right when you start putting on a position, I don't get really nervous about it, because most times when you first put a position on, it goes against you because the stocks go up, they go down. But the longer that you hold a stock, the less risky it gets. Obviously, for Snap, that's not the case, but we can. I mean, that's relative. This is relatively a new purchase. I don't really know when we made this purchase. Yeah, I made this on March. So, I don't really believe in Snap and the company, but the only reason why I'm holding on to it is because the loss already. It was a small investment, like a $300 investment, not a huge deal for my portfolio. It was a very small piece. It was a kind of a test, and they just have not been performing. So in terms of the downturn, if we go for the last month, in the last month alone, we're down 8%, which, as in like this blood red October, if you're looking here, I mean, everything was down. This is the S&Ps, and just got sliced through. We're back. We almost hit yearly lows again, and after we hit some lows in February. But I mean, the stock market, if you think about the stock market, it's in a rotation period. I mean, it was going up for so long. If we go to the 2-year chart here, I mean, all of 2017, it just went up like every single day. Almost every day we went up. And volatility was super low, as you can see down here. Volatility was low, but now volatility has returned to the market, which I think volatility is great for both buyers and sellers, for short and for long, for bears and for bulls. And if you're day trading stocks, I mean, you might have a different outlook. But in terms of this Robinhood portfolio and long-term holding, right now I'm looking for stocks to purchase, to add to this portfolio, to grow this portfolio over time. For me, this is like a 5-year, 10-year plan, and this is not something I'm wishing to cut in the next year or so. Now Tesla, on the other hand, Tesla was one of the only ones I sold out of this. If we go into the order, so in February of 2016, I bought some shares at $150, and then November of 2016. Or 2017, I sold them for $315, and you could have said like maybe that's a bad deal, maybe you weren't thinking it right. But kind of looking at this chart, if we look at the chart today, so I sold it back in November, which was let's go to November here, right after 389, kind of this decline. And the reason why I sold it is because they were, as a company, they're not making any money, they're not making any profits. They were having a very hard time hitting their production goals. And as you can see here, all year we just kind of ping-ponged here. And I don't feel bad about selling my shares, because by holding all year, by holding 365 days, I would not have been rewarded as an investor. My account, my shares would not have increased. They would have stayed the same and gone negative. And at this time, it hit the 250s, quite a few times already this year. And then they had this last earnings where they ripped up. So, I could always, the thing is, like, for taking off a position, the reason why I took off this position is because I lost confidence in the company, not because I didn't think that the investment wasn't going to grow. This could go to 400, but in terms of like long-term holding, you really want to focus on like company fundamentals. Are they making money? Are they going to be improving quarter after quarter? In Tesla, I couldn't say if that was true. Now, they did post a profit last quarter. Now, if that starts becoming a trend, maybe I'll buy more shares, because now it's at like 350. If they start becoming a profitable company and start going in the right direction, I mean, this could go to $1,000 a share. Now you could say, hey, you're stupid for selling them for $150 a share. But at the time, the data was telling me, you know, I let many quarters go by where they kept losing money and not hitting their goals. And, you know, the stock was still going up because it was like 2017 and we were just, I don't know what was going on in 2017. Everything was going up. And, you know, I sold because the business itself, I no longer believed in. Now I like the product. I like Elon. I like everything they're doing, but I didn't know how sustainable the business was. That's why I sold. So, you know, in terms of like major downturns, or if this turns into a bear market, I'm not going to sell a single share right now. You know, kind of recap here. I'll be looking to add positions and long-term growth. Like Baba, I think is definitely undervalued. It's definitely being hit by like tariff news. You know, this is obviously my opinion. They've been hit with the Chinese-U.S. tariff war. But I mean, in terms of Baba, it's grossly undervalued compared to other tech stocks. It's growing in the cloud business. It's growing in the e-commerce business. You know, it's doing great as a company. You know, they have earnings tomorrow, so we'll get some more information on that. But you know, I thought it was a great buying opportunity. And right now, you know, in 2017 there were like 0 buying opportunities. Now that the market's going down, we'll be able to get some things that may be fair value or even cheaper than value. So if things go down even more, like if Square goes down, you know, down to $50, I'll definitely look to add to that position. So, you know, that's kind of my 2 cents on holding during a market downturn, growing your account. And as you can see, like if you go back like the last year, you know, if you go back to February here, when you look at February 1st down to the February 5th when we had that big sell-off, I mean, that's not even like a little blip. And then at the time, it seemed like a big deal to go from like, you know, my account balance went from like 3,800 all the way down to 3,700, and that was a big deal at the time. That was like 10% of my portfolio at the time, and then that just led to a more major rip, and then that dipped down. We went up to like 4,300 in account balance, up 22% in the year, and that ripped back down, and then you know, the tech sold off pretty big back in March. And then that led to even a bigger rip. So now we had this huge fall. Are we going to rip higher? Are we going to stay the same? You know, that's the big question. You know, if we go lower, I'll be looking to add. If not, then I'll be rewarded as an investor for holding my stock through the downturn. So if this video was of value to you, hit that like button. And if you're not yet a subscriber, hit subscribe. Definitely appreciate you. It's always us versus herd.